Take a listen to what was just said about Tesla stock today on CNBC.
Tesla today has a call. Wells Fargo, we're least confident in Tesla in Q2, Bryn. They expect Tesla to be impacted by another sub 400K delivery quarter, lower pricing driven by promos. They reiterate they're underweight and the target's 120. What do you want to do with this?
I don't think it's going to 120, first of all. And so I said when the stock was down in the 140s that I feel over the next couple of quarters, the outlook is murky. Do I think all of a sudden EV sales globally are going to pick up and start clicking away? No, I think it's going to be a murky next couple of quarters. I do think, though, the big event is going to be August 8th, right? Elon's going to come out and his team, and they're going to reveal their plans for self-driving, robotaxi, et cetera. And I will say there's probably no other founder CEO in the world that can keep investors interested and excited about a name than Elon Musk.
Oh, well, that's for certain.
So I think it's correct. It's all about August 8th for Tesla stock. Wall Street is kind of already prepared for a bad Q2 delivery number on July 2nd, although the data today suggests that that number could actually be pretty strong with the weekly insurance registrations coming in for the highest week last week in all of 2024 so far. Now, today was actually a pretty rough day for the average stock out there, so Tesla stock outperforming was a great sign. I mean, Tesla stock did fantastic today, and that was a huge win. You really just had big tech that carried the markets higher today, with Nvidia up almost 7% and Apple up over 1% and Google up over 2%. It was a big tech kind of day today. As I shared in the last video, you actually had the percent of stocks above their 50-day moving average drop about 4% today. So 4% of all stocks fell under their 50-day moving average. Now at 38.7% of stocks above their 50-day moving average, you are firmly in a downtrend for over 61% of our markets. In fact, bar chart over on X says the Nasdaq is now outperforming the S&P 500 by the largest margin in almost 30 years. Yes, even surpassing the peak of the dot-com bubble. And here you can see from Zero Hedge, we are as concentrated in our markets as we were since the Great Depression. And this is the top 10% of stocks by size versus the entire US stock market. Now you have 10%, the top 10% largest companies that are 75% of our markets, even surpassing the level of about 73% we hit during the dot-com bubble. Here you can see S&P 500 tech sector's free cash flow yield is at its lowest since March of 2002. That just means you're not getting great value in tech stocks today. And stock correlation within the S&P 500 is approaching 20-year lows, according to Bank of America, with really the release of ChatGPT that started this downward correlation, meaning that you really did not have a lot of correlation or have not had a lot of correlation in markets ever since AI took off. It's really been an AI market, and that's it. And with that, equal weight S&P 500 relative to the market has dropped to levels last seen in 2008. So again, your equal weight S&P very much underperforming the S&P 500 that is market cap weighted. Large speculators and hedge funds have moved swiftly back into net short territory for S&P 500 futures. Brian Dietrich says over here on X, peak to trough max correction this year is only 5.5% for the S&P 500. This is historically quite low and suggests we probably see a larger pullback at some point during the year. This would be the smallest for an election year since 1972, where you only fell 5.1%. The average election year sees a pullback of 13.1% ever since 1950. I'm actually not in the camp that we're going to see a lot of election volatility. Of course, is it possible? Yes. Usually election volatility happens because of the potential for uncertainty, but both of these individuals running for the White House have already been in office before, so we kind of already know what to expect. But the jury's still out, and that is yet to be confirmed. But I will say, really, for election volatility, you want to watch the second half of July all the way through October for that potential correction. Target today says they will reduce prices on about 3,500 more items throughout the summer. Fed Bowman said today that really took some headlines and took a lot of people by surprise. She said, I don't see any rate cuts for 2024, shifted cuts to 2025. She also said she is still open to raising rates if inflation doesn't improve. Yet again, reiterating just how far behind the curve the Fed actually is. There will be a recession. The Fed will cause it. We need to prepare for that right now. I would say good news is stocks like Tesla and small caps, as well as mid caps and basically average companies, they're already pretty well prepared for a recession. There's not super lofty expectations. Valuations are already lower. The area that is not prepared for some kind of recession would be big tech, your AI stocks, and obviously your semiconductors. Bank of America's bull and bear indicator rose to 6.1 from 6.0. 4 out of its 6 components are bullish. I like to look at the CNN's Fear and Greed Index more to kind of measure the overall market. And that is sitting at 39, which is in fear territory. The most fear you have seen since at least the spring correction that we had. Again, at the same time, the S&P 500 is sitting less than 1% off of all-time highs, and on the RSI is still overbought. I can't recall another moment in time where this has happened before. This either ends one of two ways. This either ends with a pretty dramatic crash or pretty dramatic, large correction, or this ends with a big broadening out of our markets. The only way I see a broadening out of our markets actually happening, though, is that the Fed gets off the delusional ship they're on and starts realizing the pain that is out there in the economy and starts talking about cutting rates and then actually cutting rates before we do go into a recession or before there is some kind of growth scare out there. But I don't feel confident in that. So the only thing that sounds reasonable to me is some kind of correction could occur over the next coming months. And yes, Tesla stock would go with the broader markets if there was a correction, especially if it's before August 8th. Tesla stock up over 2.4% today, trying to break out. You really got to get above that 188 level. If that happens, fantastic. I'm not going to hold my breath until at least July 2nd. When it wouldn't surprise me if Tesla rallies on a quote-unquote bad delivery number. But again, even though Tesla is rallying today, that's a great sign because the broader markets are not. The average stock is declining quite a bit today. Tesla is really being grouped into that big tech camp today, which wouldn't that be nice for Tesla to start getting grouped into that category? I do think overall we're going to trade in a range between the higher end of 188, which we're about $1 off currently, or the lower side at about $184 per share. Tesla's RSI is slightly higher than what I would call neutral at 58.43, so a little bit more on the bullish side today. And your MACD lines still look very good. 10-year Treasury yields today did end up falling almost 2 basis points. Over on StockTwits, sentiment for SPY, the ETF that tracks the S&P 500, is at 47 today, which is neutral. Yesterday, it was at 30, which was bearish. Message volume today is 57. Yesterday, it was 48, both of which considered normal. And the participation ratio today is 53, which is also considered normal. We will get some data coming out tomorrow morning, not much. New home sales for the month of May, expecting about 0.65 million, and new home sales month over month expected at positive 2.9%. Coming off of last month's number of negative 4.7%, that's not all too impressive. What I find pretty interesting about tomorrow is we get the bank stress test results at 4:30 p.m. According to the FDIC that warned today, 63 more banks have been added to the quote problem list as $517 billion in unrealized losses hit the U.S. banking system. Now, bank stress tests are really for the largest banks out there, so I'm not expecting much, but if there is any banks that fail, that could get pretty interesting. Tomorrow in after hours, you will get Micron that will report earnings. That is a company that does a lot of memory storage components of, NVIDIA products and other semiconductors. So Micron is a main focal point of tomorrow and of that AI trade that will come out in after hours. You also have BlackBerry and Levi's as well as Jeffries that will all report tomorrow in after hours. Tomorrow pre-market, I should mention, you have Paychex and General Mills. Thursday pre-market, you have Walgreens and McCormick, and then in after hours, you have Nike. On the day today, the dollar was up a 0.1%. Not a huge deal overall, but still upward pressure on the dollar. It's typically never great for markets. You do have oil that is down about 1% today, and TLT that is up 0.15%. Do you remember this Model 3 with 2 kids and 2 adults inside that falls 250 feet off of a cliff? Well, their injuries were initially described as moderate. California's Highway Patrol doesn't believe the car was an autopilot or FSD, and CAL FIRE says nothing short of a miracle they survived. Tesla's safety is next level. California radiologist who drove the car off a cliff with his family inside will not face trial because he was granted a mental health diversion by a court due to evidence that he has major depressive disorder, according to the San Mateo County District Attorney's Office. Just still crazy that everyone survived and was fine. So do me a quick favor, let me know what you think about all of this information down below in the comment section. That is what you guys need to know in regards to Tesla heading into tomorrow and throughout the rest of this week. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.